Since the start of 2023, the cryptocurrency market has seen a meaningful recovery after a brutal bear market, with the total market capitalization of all cryptocurrencies increasing from $798 billion to $1.0 trillion, which is a 34% increase. Much of this growth can be attributed to Bitcoin, which recovered from its yearly lows of $15,883 in November of 2022 to reach over $27,669 as of October 10th, 2023. Overall, Bitcoin is now up a substantial 74% since its lows last year, and Bitcoin dominance has increased from 39.4% to 50.3% over the same period. Given that the performance of the broader crypto market is genuinely contingent on how Bitcoin performs, there is a good reason to pay attention to the OG cryptocurrency that started it all. Having recovered significantly this year and with multiple catalysts in the pipeline, there are more than a few reasons to suspect that the next bull run is just around the corner. So let's talk about the Bitcoin halving event. So according to the CMC Bitcoin halving calculator, Bitcoin is expected to undergo its fourth halving event, seeing its inflation cut from 50% as the miner block reward is slashed from 6.25 Bitcoin to 3.125 Bitcoin. Following the fourth halving, Bitcoin's inflation rate will fall from around 1.74% today to around 1.1%. To put this into perspective, even fiat currencies with the lowest monetary inflation easily dwarf these figures. Historically, Bitcoin has demonstrated a roughly 4-year cycle centered around the halving date. Broadly, this has included a period of decline in a bear market, followed by consolidation and accumulation prior to the halving event, with a new all-time high achieved roughly a year post-halving. Now let's take a look at the history of the halving. So we're going to take a look back in time. So though past performance isn't always an indication of future success, Bitcoin price is moving similar to how it did prior to the rally that culminated in Bitcoin reaching almost $69,000 a coin. According to recent research by Delphi Digital, Bitcoin is currently partway through the accumulation phase of the market cycle and could be on track to achieve a new price high by Q4 of 2024. This is further corroborated by Plan B's controversial stock-to-flow or S2F model, which quantifies scarcity by comparing existing supply to new production, forecasting price increases as halvings reduce new coin issuance. The model suggests that a new price high could be reached as early as Q2 of 2024. Now, let's take a look at Bitcoin fundamental indicators. So given the transparent nature of Bitcoin networks, it is possible to collect and analyze on-chain data and extrapolate meaningful insights, enabling even non-technical users to easily identify trends and effectively gauge market sentiment. As always, these indicators are subject, and in many cases, they are an indicator of the historical performance of the market. So to gain a clearer picture, it's important to look at multiple data points, taking into account both on-chain metrics and broader market dynamics. With that said, several measures now point to an optimistic future for Bitcoin. So taking a look at Bitcoin's annualized 30-day volatility has gradually compressed, falling to a historic low of 15.63% in August. Bitcoin's price volatility tends to compress during a bear market and expand during market recovery. It is generally believed that consolidation leads to near equilibrium between buyers and sellers, as long-term holders grow their positions while sellers reduce, volatility flattens. So Bitcoin's 30-day volatility has rarely fallen below its current figure. Other technical indicators also suggest a significant upswing is on the way. So this includes Bitcoin's realized market capitalization. So this is the sum value of each coin at the price when it was last moved or transacted. This metric provides a more nuanced view of Bitcoin's market capitalization by focusing on active coins, de-emphasizing lost or dormant coins. Historically, Bitcoin's realized cap has only been higher than its market capitalization during the lowest troughs of a bear market, so following which the market cap expanded dramatically every time. The last time this occurred was in January of 2023, indicating the worst of the bear market could be behind us. There are also signs that miners are beginning to consolidate, indicating that miners are becoming more and more likely to hold onto their coins rather than sell them at current market prices. So as per data from Macro Micro, it currently costs an average of $32,893 to mine a single Bitcoin, Bitcoin compared to the market price of $27,660. This is one of the biggest discrepancies in mined cost versus market price seen in the last 3 years. In past cycles, Bitcoin's average mining cost has only exceeded the market price during the bear market and accumulation phase of the 4-year cycle. Once the blue line drops below the orange line, this will be a strong signal that Bitcoin is once again in a bullish trend. Now, let's talk about regulatory events. So several long anticipated regulatory events are potentially set to take place in 2024, which, depending on the result, could be a major catalyst for a 2024 bull run. In June of 2023, the largest asset manager in the world, BlackRock, filed for a Bitcoin spot ETF with the US Securities and Exchange Commission. With an overall 99.8% approval rate for its previous ETF applications, hopes are high that BlackRock and other firms will finally be able to offer Bitcoin spot ETFs in the US. The announcement sent the price of Bitcoin soaring to its highest value since May of 2022 and promoted a wave of similar ETF filings in the US. Beyond this, the EU is set to get one of the most comprehensive regulatory frameworks for issuing, intermediating, and dealing in digital assets coming into effect between mid-2024 and early 2025. MiCA governs crypto asset issuers and service providers, aiming to protect consumers, maintain financial stability, and also foster innovation. MiCA distinguishes between cryptocurrencies, tokens, asset reference tokens, and electronic money tokens. It mandates transparency from issuers, registration for crypto asset service providers, and adherence to anti-money laundering measures. So in 2024, cryptocurrency taxation rules will undergo significant changes in the US. This may actually prove bullish for the market. For one, non-recognition rules will apply to loans of actively traded digital assets, similar to securities lending, enhancing liquidity in the crypto market. Traders in digital assets will also be able to adopt the mark-to-market accounting method, simplifying accounting and tax compliance for frequent traders. So while on-chain metrics and historical trends paint an optimistic picture for a potential 2024 bull run, it's crucial to consider broader market dynamics. The anticipation of regulatory shifts, such as the potential approval of Bitcoin spot ETFs, comprehensive frameworks like MiCA in the EU, and also evolved taxation rules in the US, provide a conducive environment for growth. Additionally, external factors such as potential Fed interest rate cuts and increased institutional adoption further cement the case for a bullish 2024. Finally, the Bitcoin halving event, which has historically ushered in the crypto bull market, should be on everyone's radar.